Hello everybody, welcome to the Verdence Capital Advisors second quarter review. Today we're going to review the results of the market for the first half of the year 2018, as well as look ahead at some of the interesting aspects of the market, where we find value in the market, as well as talk about the economy and the very interesting fixed income markets that are going through quite a bit of turmoil this year. So let's dig in. And as we can see, the topics today are going to be what's happening with the U.S. economy. Obviously, there's a lot of noise in the marketplace, and we want to talk about how that's impacting the markets. Is the yield curve telling us something? In other words, in the fixed income markets, we're seeing a lot of movement. The yield curve is flattening. That traditionally has sent a message. So the question is there something we should be concerned about there? Where's their value in a growth market? The markets in the equity markets today have this very wide dispersion between different groups of the markets. Now that can be frustrating, but it also can be very opportunistic. We're going to dig deeply into that as well. Should we stay home or go abroad? The international equity markets look very interesting. They look like they're a great value. Let's talk about that, and we're going to go into deep detail about why we think that's a great value, as well as to hedge or not to hedge. So when we're reaching such a high level in the equity market with a fixed income market that's also coming to the end of a 37-year bull market, hedging portfolios and pulling risk out of portfolios at times like this is in fact probably a very smart move. So let's dig into each aspect of this and start to discuss how we look at these markets. So let's start with this year's returns. So it's been an interesting year in the market. We had a big run up in January, and then the market gave back all of those big gains. We went into a loss. We actually officially went into a correction, which is technically down 10%. We've since rallied back, and we've heard a lot of noise in the equity markets, but at the end of the day, we're pretty much close to even. As we can see on this chart, the NASDAQ is the big winner. Tech stocks have taken off this year. They've remained strong. It's a very, very narrow market advance, which we're going to go into the details of in this presentation. The S&P 500 is barely positive, but as we look at the international markets, across the board, all the international markets are down. And again, we think that we see value in that aspect. In terms of industries, it's the more volatile industries from an earnings perspective and a stock market perspective that have done the best this year. Technology, consumer discretionary are all up. When we look at the traditional safe bets like consumer staples and financials and telecom, all of those markets are down. It sets up for a very interesting second half of the year. In terms of bonds, pretty much everything's down. We talked about this in our year ahead themes, that we were coming to the end of a 37-year bull market in bonds. Treasury yields have gone up. When yields go up, price goes down. So across the board this year, the fixed income markets have been somewhat challenged. In terms of commodity, energy's up, everything else is down. So the energy markets, we're starting to see a bit of constraint in the supply, while the economy has been very strong, so therefore demand is increasing somewhat dramatically. Increased demand, reduced supply, price goes higher. Other commodities are not seeing the same momentum.